For more on how to position your portfolio for that time, we have Jay Woods, Freedom Capital Markets Chief Global Strategist. So Jay, thank you so much for joining us. As we just laid out, strong third quarter for stocks. How much upside do you think there is through the end of the year, especially with the start of the Fed's easing cycle?
Yeah, I think that Fed easing cycle will be the story once we get through the election. We're going to get some crazy headlines and some jitters as we get to that early November election. And then once we get through that, as we saw in 2016 and 2020, I think we're off to the races. The setups are there. You just went through the quarter leaders and losers. What was the second biggest loser? Technology. I think technology is poised to come back as we continue to rotate from sector to sector and take us higher in just the overall market. You look at the three biggest stocks in the technology sector: NVIDIA, 15% off its highs; Apple, about 5% off its highs; Microsoft, 8% off its highs. I think we're going to get a nice tailwind, and guess what? We saw the story exactly happen last year. So I think the setups are there. With the Fed easing cycle, it takes a little while to get us going, and comes November, December, this is the strongest quarter of the year. On average, we're up 3.7%. Now, when we hit a September high like we did this year, 19 out of 21 times. This is a Ryan Dietrich, give him props quote. We've gone higher 19 out of 21 times when we've made a new high in September, and the average gain is 5%. In election years, it's 6%. So I think the setups are there, and the rotational trade will continue, and we'll rotate back to technology.
Yeah, and to that point, the fact that we've been at these record highs without the help of NVIDIA, that has been something that we've been keeping an eye on closely. But this Friday is the jobs report, right?
Yep.
Next big catalyst for equities. Let's say we see the unemployment rate edge slightly higher. How concerning is that for you? And do you expect an overreaction on the part of the market, no matter what the economic data tells us?
Well, I think we'll get an overreaction.
Yeah.
The market's been jittery. It's been the CPI, and now with the dual mandate and the focus being on jobs, I think that unemployment number really gets scrutinized more than ever before. We're looking for 4.2%. I expect it to be probably right there in line. If it isn't, if it's higher than that, then they're going to talk about rate cuts, and maybe we need more, and how will that upset the inflationary side of their dual mandate? So we're going to be watching that one closely, coming right out of the gates for October. That's the one thing traders are focused on the most.
And you alluded to how markets have really been overreacting to every one piece of data there. So as an investor, how do you play some of that volatility? You mentioned the election cycle earlier, likely to be some volatility there. Should you be preparing your portfolio in any way?
No, I think investors have to kind of block out some of these headlines, especially come election rhetoric. We're getting a lot of gloom and doom, a lot of negative things, but the economy has been hitting. Earnings growth has been stable. Earnings season kicks off a week from Friday with JP Morgan. I know we have Nike this week. We're going to watch that closely. But overall, the trends continue to be positive economically. So these headlines may cause jitters. Yes, there's geopolitical risk. We're going to always have that in the backdrop. But I think the way we're set up with this rotational trade, with I think 7 new sectors breaking out. You mentioned materials just broke out. Industrials looking fantastic. Discretionary, phenomenal. Communications, here we go. So to me, the setups are there, and there's a lot of money on the sidelines, people missing out. So once we get through that election, that FOMO trade may really ignite a rally, and I'm talking 5%. That gets us over 6,000. It's going to sound like a headline. Wow, guy predicts 6,000 in the S&P 500. But when you look at the math behind it, it's kind of logical given the tailwinds we have behind us.
Do you think there are any sectors that are poised to really benefit the most from that FOMO trade?
Well, technology without a doubt, because people are going to be like, wait a second, we just had a bit of a sell-off there, not at 52-week highs, we'll get in there. And I think utilities continue, the leading sector of the year, continue to be the one trade people are looking at. They're not our grandparents' utilities anymore. These are not dividend-safe plays. There's technology behind it. So that AI story, you look at cybersecurity stocks, the CIBR and the Hack ETF, both breaking out to new highs. And then IGV, which is the software ETF, not enough love, try saying that 5 times fast, for that sector, also breaking out. So the setups are there, but utilities is one sector. It hasn't led other than the year 2014. It looks like it could be the leading sector this year. And If you look at that on a weekly chart as a technician, I know Jared is going to love this in the back over here. That just broke out of a very nice base. I think utilities are a sector we're going to focus a lot on come 2025.
Right, and that's something in the beginning of the year I wouldn't have thought utilities would be leading the way higher.
Not in a million years.
Just goes to show you cannot predict this market. But Jay Woods, Freedom Capital Markets Chief Global Strategist, thank you so much for joining us today.
Yep.